All right, we're outside of the Dillon, about to meet with Brandon Kelly, local lender here with Cardinal, to figure out what is going on in this market. Come on, let's go. All right, so like I said, we're meeting with a lender, trying to figure out how we can best serve our buyers. I actually really like this building. It's in downtown Raleigh, and the 9th floor has a great view of the city, which is pretty cool, and a really cool elevator ride. So this is exciting, and this is what I try to do for my buyers, get as much information as possible and figure out what's the best way we can help them out, you know, in this insane market that seems to be never ending. All right, what is up, man? How you doing?
Man? Good to see you.
Oh man, I love the Dillon.
Yeah,
it's beautiful.
Welcome to the space, man.
Let's check out your spot.
Yeah.
So what I was telling Sam on the way up here is that we're meeting with you to kind of explain what's going on with rates, explain what's going on with the market, and how can I and us kind of best serve our clients.
So it's an interesting time. I mean, you know, it's funny because I keep having so many people talk to me like about rate whenever I have to have rate conversations every day, but it's so funny because everybody's like, when I talk about rate and say there's a lot of changes and things going on with it, people are always saying to me like, they're like, oh, I've been watching. I'm like, you've been watching interest rate? You know, it's like, it's just an interesting thing for people to be focused on right now, and I just think there's a lot of attention in you know, the media, what have you. I mean, it's certainly an important thing, but I think it's really had an impact on what people are.
And it's crazy, man. It's like, first of all, securing the financing and then winning in this crazy market in Raleigh that no one really seems to be able to predict. Just because, you know, 2 years ago when this first started, everyone was like, all right, this is going to be a 6-month thing, and then we're going to go back to normal.
Yeah.
2 years later, COVID has impacted the way real estate is done. I mean, on the commercial side, it's like office is slowing down. On the residential side, everyone's buying right now.
Yeah.
And it's getting to a point where people are just scared. And now rates are hiking up, which kind of slowed down the low-end buyers.
Right.
But man, we're still seeing multiple offers.
Oh yeah.
I mean, in the $1 million price point, we're seeing multiple offers.
It's hyper competitive. I mean, so from the Triangle MLS just came out. From January 2021 to January 2022, the average sales price is up 19%.
That's crazy.
And that's on average in Wake County. You know, there's figures, I've seen figures for Harnett as high as 91% on average appreciation. So, you know, you combine that with increasing interest rates, and you know, there's really a lot of competition here, and it's, again, I think that attention to it, I think attention to rate and the attention to the prices as well, that's kind of currently the hot topic. It's kind of put a lot of buyers and people that are interested in purchasing homes in a weird mentality, you know, and so I think part of what I'm doing, and I know it's part of what you guys are doing as well, is having to kind of change people's mentality that come to us.
It's huge.
You know, because everything that you're going to hear from the media, all that public talk, kind of tends to always focus on the negative, you know? And so you're retraining buyers, you're getting that negative mentality out of their head, because one of the first conversations that always comes up, and even with buyers as this goes on, is what you could have had, right? What things were.
That's the problem.
Right.
That is the problem. You're hitting it on the nail. Everyone's comparing it to 2-3 years ago.
Yeah, exactly.
And it's not the market anymore.
No, because you can't have that, right? If you're buying right now, you have two options. You have what you can get now and what you can get later. Again, 2 years is off the table. 2 years ago is off the table. 2 months ago is off the table, right? Things are different. And if what you are going to purchase is going to be better in the future, if it's going to increase in value in the future, then, you know, again, is it really a seller's market? It's still a buyer's market. I mean, 20%, again, on average, that kind of appreciation, a normal market, I think on average in the United States is like 4% appreciation every year. So, you know, I mean, in order to get that kind of return, that's like 5 or 6 years of appreciation. I mean, it's insane. What an investment.
Insane,
it's ridiculous.
And that's what I tell my clients. I'm like, hey, you might be going over asking.
Yeah.
But homes are appreciating so crazy right now. Like, get in before anything else that can happen that can ruin this. You know what I mean? I mean, Zillow came out saying that they're going to see anywhere from 25 to 35% appreciation in 2022.
Well, we're seeing it.
Yeah, I mean, it's absolutely crazy. In the past couple deals I've done, all the properties have appraised, and we're going over asking. You know, $52,000 over asking, and the home's appraising. Not all situations are like that, but it shows to you that appraisers are keeping up and lenders are understanding what's going on. But the mindset factor that you just touched on is huge.
Well,
think about what it's going to be in 2-3 years. Not what it was 2-3 years ago.
Right.
And that's the big thing now.
Yeah.
I'm like, dude, like how is someone on the fence about purchasing a property when so many companies are just, they don't even think twice, and they have analysts that are studying the areas. And are throwing money in this areas, but and it's like people are on the fence about a $300,000 home.
Well, but it's even what you see like on the ground, dude. Like, I mean, I've been here 12 years, and now it's just like, and it could be one of those biased things, man, but I'm constantly meeting people from New York, Houston, Boston, Chicago.
Everywhere. You
know, and that didn't used to be the case here.
No, and the road rage has been picking up too. I don't know if you've noticed. I think it's all the New Yorkers coming
Well, dude, the traffic. I mean, seriously, like one thing that I always used to talk about with Raleigh is like, what's cool about it, or what used to be cool. I used to say this all the time, like back in the early, like what, 2014, whatever. I'd be like, you can get downtown from anywhere in Raleigh in 15 minutes. And it's just so,
it's not
like I was proud of it not long ago. I was just really, and I think we were topping lists at the time about like praising our traffic patterns and how it's not bad and everything.
Oh man, now Raleigh's infrastructure needs to change quick.
But it's still gonna get worse. I mean, literally, like we were just saying, from here, first of all, you can see like 4 or 5 cranes if you just look out the window. There's 11 different developments right now, big skyscrapers going up in the next year, breaking ground and starting on development.
And they just got news of potentially the tallest building in Raleigh being breaking ground next year. And it's exciting, a 40-story building. Which is, I mean, the PNC building is only 35 stories. So it's drastically gonna change our skyline. And all the money and the people that want equity in this area, I think should be a sign for buyers that, hey, don't be scared to overpay, because you're overpaying for a reason. Raleigh's going somewhere. It hit the growth spurt.
It's going to be different.
And you want to own a piece of Raleigh in 10 years when there's not going to be a single $200,000 property in Wake County.
No. Well, you're talking about Apple, the second largest company in the world, is I don't even know that they've broken ground yet, but I always tell people too, it's not even built. The campus isn't even constructed yet.
Now's when you need to do it.
But also, it's not like they're going to come alone. Like Apple's not going to put a headquarters here, and then other companies are not going to follow, right?
They broke the ice. They broke the ice.
The big money, again, because we hear it all. Everybody wants to talk about bubble, bubble, bubble. And look, anything is possible. I always preface it in saying that, right? Because nobody knows. I have to watch the bond market every day, and I have to study the mortgage-backed securities, where interest rate is going, and it is a really, really tough thing to predict. And anybody that tells you with reasonable certainty that they know for sure where it's going to go is I mean, no
one really knows.
No one knows. But there's a lot that would suggest, and again, even the big money, I feel like that is a big pull for the residential market. Is we've got all this big money, we've got companies, you've got the commercial development supported in this area that's going to just keep driving up the price of homes. So, I mean, while I think a bubble there's anything possible, I just don't think that really is. No. It would seem very improbable in this market.
I mean, if I was a buyer right now in this market, I wouldn't focus on getting my dream home unless I'm in that position where monetarily I can do it. I'd focus on getting a piece of Raleigh. How do I get a piece of Raleigh? How can I just get it, put the deed in my name? That way I can rent it out, or I can sell it 3-4 years down the road when this crazy percentage of appreciation is compounded. And I think that's the goal home buyers need to have, not comparing it to past values, but comparing it to future values. And to the best of our knowledge, it's going to stay like this.
And it's so funny, man. I mean, literally, like, and even throughout the process, it's always, the comparison that is always made is that going back to what it was, or a past opportunity. And even throughout, because we work with borrowers, there was a time in this market where it wasn't as hectic. Lately, it's been like super hectic. And with all the realtors I work with, like even even the best ones are struggling to get offers under contract because it almost, January, February turned into a little bit of like a panic buying scenario. The closest I relate it to is like when, the pandemic started and everybody was going to the grocery store and just buying everything off the shelves. That kind of felt similar to what was going on January, February. It seems like inventories open up. So now in the spring market, I'm seeing a lot more people, go under contract and get homes.
And people are, it's a perfect storm for Raleigh. COVID hit and people in bigger cities are like, why am I paying $20K in property taxes? I could work from home.
Right.
Raleigh has a good quality of life, good cost of living, which is probably going to be going up with everything that's been going on. But they're like, man, it's easy. That's an easy decision. And we also, our crime rate is very good. We have 3 major universities right next to each other. I mean, I don't know another area that kind of has the structure we have, especially when you include that Durham's 40 minutes away, Chapel Hill's 40 minutes away as well. So you have these 3 major cities that are just right next to each other that are flourishing really fast. And then people are like, why is the market like this? I'm like, everyone wants a piece of it.
But again, there's just so many factors going for this area, but it's just very natural for a borrower, for a buyer to focus on the negative, to focus on the things that, it's like it's gone up. And even like I was saying earlier, throughout the process, because interest rates have been on the rise and people struggle to get under contract. And there's people I'm working with where when we initially talk, a monthly payment for a certain price range is X, and then, it takes a few months and now it's higher. And really the conversation that we've started to have is, it's like, well, you can get it now. It's more than you wanted. Yes, it may be a little more than you had expected, but you can still afford to get it right
feasible.
Now. It's like take the insurance, right? It's like you have that opportunity, and you need to consider the fact that, again, those projections from places like Zillow of 25, 35%, I mean, it's supported in what we're seeing. And so it's like you need to consider that as a real scenario. And if that occurs, what are you going to be able to afford to buy? And
well, that's what I'm saying. It's like, hey, I just don't want to pay this much right now.
Right.
And I'm like, okay, but in 2-3 years, you might not even be able to purchase.
Right.
Like that might not even be an option.
Yeah.
And it sucks because people that grew up in this area absolutely love in this area. They've lived in North Raleigh their whole lives. They lived in downtown their whole lives.
Yeah.
They're getting to a point where they're about to be priced out.
Yeah.
And if you think about people coming into this area, they're selling their $2.5 million condo in Manhattan, coming down here and being like $700K, and I'm getting an acre of land in North Raleigh.
Yeah.
Write the check.
Yeah.
So it's a different way of thought, and I challenge buyers to change their mindset and think about the future investment in equity they're gonna be building if they could get a piece of what they want. I mean, look on the outskirts. Builders are buying like nothing. Land, buy, build. South of Raleigh right now, Johnston County, it's all new construction.
Yeah.
And it's funny because when I first got into real estate, it's like, hey, you couldn't afford Raleigh, you got to go on the outskirts. Now it's the outskirts of the outskirts.
The outskirts have changed.
And we're seeing those counties hit numbers like crazy. Like you were just talking about, Johnston County, I think grew the most in the last decade. It's because people from Wake County were just coming down to Johnston. And we're going to keep seeing this trend, especially with the 540 Beltline completion we were talking about the other day. That's a huge opportunity, man. Same with Apple coming to RTP. Everyone knows about it, but it's just like, why are we not moving on it? Why are we not moving on it? Garner is going to explode. As soon as 540 wraps around Garner, Garner is going to explode. And I predict a similar community in Garner or South Raleigh, potentially around the White Oak area, like North Hills down there. Because that's the main reason North Hills kind of was developed. 540 and 440 wrapped around that area.
Yeah.
So I'm like, man, it's right here. So it's like, why would you not pull the trigger on something like this? But it's understandable. People are scared. They don't know what's going to happen. But people don't know what was going to happen for the last 2 years.
Yeah.
And it's been going like this.
Yeah, and there's evidence to support it. I mean, you can look at other areas like in Austin. I mean, when Apple came there, I mean, I've heard accounts of like 30 to 40% appreciation for years. And when you look at Austin, actually, we were on a lot of lists with Austin. We still are. We always have been. So it wouldn't surprise me if we follow a similar trajectory. I mean, you know, again, everybody always, I guess being in this position, I deal with people right now when they're buying, and there's a lot of uncertainty and they don't know, and there's a lot of fear. And again, the focus is always, everything they hear is on the negative. The focus is on the negative. And it's funny because, I also talk to people, that bought a year ago, that bought 2 years ago, and even just a few months ago. Actually, I have friends that bought back in like December. And it's funny because there's a lot of clarity that occurs when you go and you look at the appraised value, estimates on appraisals, and the estimates for your property value. And in short order, you're seeing ridiculous amounts of appreciation, and I mean, even again, just months later. So suddenly that feels like a much better investment. People tend to be a lot happier after the fact when they see it. And again, I just think there's so much that supports that as a real possibility of it continuing to occur, probably I think for the next few years.
Wow. So if you were a buyer in this market and you're on the fence, you don't know what to do, what would your advice be? Like, hey, if you were sitting down right in front of them, what would you tell them?
That's a really good question, because I've talked to people. I kind of don't want to step on my realtor's toes, but people talk to me about, I like the house, but I'm not sure about this. This market is just so different. You have to fight because of that appreciation and because of the limited inventory. Like, you have to really fight to get a house under contract. First of all, the whole process, and I support realtors in having this conversation, because I tell people you can't expect, because right now you can't even go to a car dealer and pick a car off the lot, really. I mean, there's shortages in inventory there, but in this market, like, you can't expect that what you did years ago. It's usually the older buyers that have bought a few homes. They have just this idea of how the home buying process should be, because that's how it was back in the day. Well, again, we're looking at appreciation that would take 5 to 6 years. So first of all, you have to expect that the process is going to be different. You're going to have to work harder, but there's ridiculous reward to people that are getting it.
100%.
And conversations like I remember, I've heard some, and I kind of really push back on this when my buyers say, like, I don't want to overpay for something. Unfortunately, it's not the luxury of the market. One quick note on that is, well, if you don't intend, let's just say hypothetically that we match even a conservative like 16 to 20% appreciation over the next year. On a $400,000 home, if you pay 10% over where you think it'll appraise, because we're seeing people having to offer above where it will appraise and cover appraisal gaps, and it's pretty common. Are you really overpaying if you pay, say, 10% over what it's worth, what it appraises for? If it appreciates at 20% a year, it takes about 6 months for you to break even on that investment. Most people, when they move into a home and they're purchasing a home, intend on being there at least 2 to 3 years. I mean, most of them 3 to 5. So if you purchase something for lower, and probably considerably lower than it's worth when you sell it, did you overpay? No, I mean, and I've had conversations with people, and they told me, well, I talked to them like, oh, well, I overspent on my home. How much you pay? $800,000. Okay. When did you buy? October of 2020. Okay. Well, what's it worth now? Oh, over $1 million. So how in the world did you overpay? I mean, these are people, it's still in the mindset of even people that are seeing the appreciation that they overpaid for something. I'm like, how did you overpay for it? It's worth a lot more in a short period of time.
It's crazy.
So yeah, I mean, really, when we're working with people, with my buyers, I really have to shift their mentality. I really push them more towards, expecting that this process is going to.
This is what I think we're looking at. I think the people are thinking we're right here, and this is going to be the future projection.
Yeah.
I think this is where people think we are at right now. I think this is where everybody in lending and real estate thinks we're at. We think we're right here, and this is what we're predicting right now. And then potentially a balance. You know what I mean?
Right.
But with the companies that are coming, how's this all going to just melt? You know what I mean?
Yeah.
I mean, they're dumping so much money into this area that people are just so scared because of how fast the market's been moving.
Yeah.
But I mean, like we were saying earlier, it's like, it's appreciating so fast that you're going to build equity within 6 months being in that property. Now, the goal is, how do you leverage that and move forward on it and get historically low rates? They're not as low as they were last year.
Great point.
But it's still historically low. I mean, people 6-7 years ago, what were they paying?
So probably 6-7 years ago, we're in that range right now. But I mean, if you look back, go back to the early 80s where the interest rate was at its highest. In the early 80s, interest rates hit prime rate around 18, 19%, which is absurd because the average buyer is beyond that, or higher than that. And then going into the 90s, it ranged probably 10 to say 6, around like 8% in the 90s. Early 2000s, you're averaging around 6%. And then, you come into after 2010, 2012, it starts to get down to the range that we're in now. But again, it's that comparison to what it was. I mean, 2 years ago, interest rates hit the lowest they've ever been in the low twos, or I'm sorry, in the high twos, right? Last year, they're in like the 3s. I mean, you can't compare it to the lowest ever. I mean, they're still really good by comparison to where they've been historically.
Yeah.
So,
I mean, pull the trigger, move forward on it, see what you could get. Worst case scenario, you own a piece of Raleigh or a piece of Wake County.
Yeah.
And especially where rents are, why not throw that thing on the market and rent it out? And I'm sure you'll be so happy in 5 to 6 years that you have that property in your name. And just like you're saying, it's better to purchase now, go a little bit above what you want to pay for, but then have that gratitude versus 5 years down the road, you're like, man, I should have bought.
Yeah.
Should have bought.
100%. And again, I mean, it's funny because now everybody's offering above appraised value. Like that's a common tactic. You're seeing that a lot. Doesn't seem like you really have to do it as much on the outskirts, but it's really common in competitive areas. I mean, I've got a couple homes in some really desirable spots where people are having to go above where it appraises for. But it reminds me a lot of, a few years ago, we didn't have due diligence on anything. Due diligence was like a couple $1,000s. Now all of a sudden it's common practice to see tens of thousands of dollars in due diligence.
Yeah, and I mean, earnest money is getting neglected.
Yeah.
Seller cares about due diligence. And for those of you watching that don't know what due diligence is, it's basically a deposit that goes straight to the seller and gets credit to you back when you close. And we're seeing tens of thousands of dollars in here, and there's some situations we've heard of even 6 figures in due diligence.
Yeah.
And that is scary in the fact of like, if you terminate for any reason, that money is gone.
It works to our benefit as a local guy. It's like, because not only are if you can't get the loan that you were promised by the bank because the loan officer, what have you, didn't necessarily do your pre-approval, your pre-qualification right, and you don't actually qualify for that loan, you still owe the buyer the money. And then also if the bank doesn't close on time, you still owe them that money. And they can choose after that 7-day window post closing on the offer, the settlement date, they can decide to take that money and get out of the entire negotiation. So it's kind of worked in our favor just because you want to trust the person that you're working with, that they're going to get it done and that they did the math right on your whole pre-approval.
So conclusion is, if you can purchase, you should purchase.
I would say so. Yeah. A lot of factors supporting it. One quick conversation, even on investments. This is another one. Things are changing, and they're changing so fast that, I'll talk to investors. I've got several investors that I deal with where, if we assume again that 20% appreciation that I think is plausible. Let's say you buy a $300,000 home and you put 20% down. 20% down of $300,000 is $60,000. If the home appreciates at 20%, then it's worth $360,000 after 1 year. Again, your money in is $60,000. You will also get the amortization in your payments, so you're going to save some there, which is, we can call that negligible. I don't want to get into the numbers on that, but if in 1 year, even if you decided to sell it and then all of a sudden now you have to pay capital gains tax on it, you're making you would make close to an 80% return on your investment in just 1 year. And if the trend continues and it happens again next year and you don't have to pay, because after 2 years you don't have to pay capital gains tax. So, if that happens, you make 200% on your return within that 2-year window. And the common conversation with investors is rent spread, I need to cover my rent. And if I always say, well, look, if you were to put that into stocks, if you took that $60,000 and you put it into stocks and it got a 40% return, that would be astronomical, insane.
Yeah.
You just made something like $36,000 now. You'd make something like $24,000, something like that.
The real estate market's outperforming the stock market.
Like crazy. Yeah. And it's a different conversation that, don't worry about rent spread, because also rent is increasing like crazy. You're going to cover whatever your mortgage is just in a year from the time you buy it. So it's all of those calculations were created in different markets. It's not that market. And so it's like, even if you're looking to invest, the returns are crazy.
I mean, I think that's the hardest thing for buyers to hear, is especially when they've purchased before, is to hear how today's market is. Yeah. And it's very hard to let go of that experience you had 10 years ago, putting $500 in earnest money and being able to put a home under contract in Raleigh. Just not the situation. I remember my first deal, we went under asking in a golf community in Raleigh, and we got the house. Negotiated concessions, closing costs, the whole 9 yards. It was amazing. And that was early 2019. That's not the situation anymore. It's just not. It's a very different market. But I appreciate you sitting down with me, having this conversation. And I have one more favor to ask from you, is check out the views we have here in the Dillon over the city.
Yeah, dude. No, this is one of the craziest, best backdrops. I would have loved to have this conversation out there, but there's so much construction going on.
Always.
Everywhere. And so it wouldn't have been possible, but great views here. It's, let's check it out. It's really cool. So I feel like this space, I'm pretty sure this is slated for a commercial, and that I think was intended to be a like a food hall.
It's pretty cool, man.
It's not right now, but I think there's plans for it.
Wow, that's nice. It's a great view. I mean, when you look up here, you're like, man, so much more could happen. It's absolutely insane.
Yeah.
So right here is where they're planning to put that 40-story building.
Like right over past us?
Yeah, like right past that park. And I think they're planning to do some with this lot right here, this green space. You got something going up right there.
Well, this is, and you know what's really cool about here, man? Like, this is a really good area for like lunchtime when I'm wanting to go grab something. You can walk to a ton of spots from here. This warehouse district has really, like, it's really desirable to live here now, just because you have so many options. You can walk.
Dude, the Dillon is pricey, man. The residential side?
It is.
Because I think residential's on the other side of this, right?
Residential's, you go to that side, but they have all the benefits here, man. It's like you can walk. It's actually a great walking spot because you can walk to downtown, like Fayetteville Street, but then you're not far from Glenwood South, and you're not on Glenwood South and all the chaos that goes on over there. Man. But like just so many good options. So it's starting to get pretty pricey, and I think that you'll see that continue to rise.
Well, I think the aggressiveness of this market might slow down in a year or two.
Yeah.
I don't think the prices are going to change.
No.
I think the prices are here.
And I was talking to some people on the commercial side and the multifamily, and they're basically telling me that, by summertime they're anticipating it going up to even, I was looking at the pricing and I thought it was pretty high, and they were like, well, just wait.
Dude, that's why that building Kane Realty just released at Eastern. That's also one in North Hills. The most insane rent I've seen in Raleigh.
Really?
You're talking about 22 square foot penthouses for $14,000 a month. I'm interested to see how Raleigh reacts to rents like that.
Yeah.
And how leased they are. I think they were about 2 to 3% leased, and they opened up in April.
Well, if we can support it, if the market supports it, then it kind of says even more about where we're at.
Raleigh's making money.
It's like, well, you see all the really nice cars. You see all the nice cars, you see all the money in the area,
Dude, yeah, it is what it is, man. Yeah. Well, you guys heard it here. If you're looking for an agent, let me know. And if you're looking for a lender, hit up Brandon Kelly with Cardinal.
Thanks, guys.